1929, Wall Street collapsed. Fortunes disappeared overnight. Banks failed. Lives unraveled. While millions panicked, one man did something unusual. He stayed calm. His name was Benjamin Graham. Every market crash feels different. Different technology, different headlines, different promises. But somehow, the outcome is always the same. Fear replaces logic. Greed replaces discipline. Benjamin Graham didn't try to predict markets. He studied behavior, and that made him dangerous to bad decisions. He believed investing wasn't about brilliance, it was about self-control. Benjamin Graham was born in 1894. His family immigrated to America chasing opportunity. Opportunity didn't arrive on schedule. His father died when Graham was young. Money became uncertain. Stability disappeared. Most people learn fear from moments like this. Graham learned restraint. At Columbia University, he wasn't flashy. He wasn't loud. He was precise. Numbers felt honest. Emotion felt unreliable. That belief followed him for life. Then came 1929. The stock market crashed. Banks closed. Panic spread faster than the truth. Wall Street had been selling dreams. Now it was selling excuses. Benjamin Graham watched carefully. He noticed something simple but profound. Stock prices weren't moving because of value. They were moving because of emotion. Fear on the way down, euphoria on the way up. That insight changed everything. Graham introduced a radical idea. A stock is not a symbol. It is a business. Instead of chasing price, investors should calculate worth. He called it the margin of safety. Buying assets so undervalued that even if you were wrong, you'd still survive. It wasn't exciting, it wasn't fast, but it worked. In 1949, Benjamin Graham published The Intelligent Investor. It wasn't about getting rich. It was about staying rational when everyone else wasn't. He introduced a character called Mr. Market. Mr. Market shows up every day, emotional, impatient, dramatic. He offers prices driven by fear or excitement. Graham's advice? You don't have to listen to him. You only have to use him. Investing, Graham said, was not about IQ. It was about temperament. One young man read Graham's book and felt clarity. His name was Warren Buffett. Buffett studied under Graham at Columbia. Later, he worked for him. He didn't just learn investing. He learned how to think under pressure. Years later, Buffett would say, "I am 85% Benjamin Graham." Through Buffett, Graham's ideas quietly shaped modern Wall Street. Today's markets look different. Algorithms, AI, high-speed trading, but fear still arrives right on time. When markets fall, people panic. When markets rise, people forget risk. That's why Graham still matters. Value investing remains the foundation for serious capital. Because technology evolves, human emotion doesn't. Benjamin Graham never promised riches. He promised protection. In a world obsessed with speed, he taught patience. Markets will rise, markets will fall. But the greatest risk has always been us. And that is why Benjamin Graham still matters. Benjamin Graham never promised riches. He promised protection. In a world obsessed with speed, he taught patience. Markets will rise, markets will fall. But the greatest risk has always been us. And that is why Benjamin Graham still matters. This video is for educational and storytelling purposes only. It does not constitute financial or investment advice. Stories like this take time. Subscribe to keep them alive.